Hi, I'm Dave Chaplin. I'm from IR35 Shield, and I'm here today with James Winter from Hiverpath.
Hi, Dave. Good morning. As you said, James Winter, director of Hiverpath, a boutique consultancy focused on the staffing industry and heavily steeped in all things IR35, much like yourself, which we'll be going through today.
So you are very much involved with the, I guess what I'm calling the dress rehearsal for what's now needs to happen via April 2021, because it was delayed, wasn't it, right at the last minute, some of which I had something to do with. So everyone sort of has had a trial run of this. And your experience is very much, I understand, at the sort of top end of the market. The contractors were on fairly high daily rates. What was your experience of it in the market?
Yeah, very much so. So worked with a number of private sector clients across multiple industries, pretty much exclusively white collar, professional, high end, as in high daily rated contractors. Not exclusively. Some of the end clients in the private sector we worked with were not that scenario. But what we saw was really from about September 2019, a concerted effort to really start to push into all things IR35 and really starting to make decisions about which direction they would go in. And there were two categories that they would fall into. What we would refer to as a policy change, which often gets referred to as a blanket decision or a blanket assessment. And that policy is, hey, we are only going to hire on a PAYE or umbrella basis. And the other is what we would call a determination approach. So, hey, we will actually use a determination process and determine if a role is inside or outside. Obviously, everything came to a shuddering halt on March the 17th, March the 18th, with the delay, of which I think you were a massive part of in really pushing that as IR35 Shield and stop the off-payroll movement. And I myself have received questions in the past, well, this week and last week, and I'm still getting questions about, will this be further delayed? So I think it won't be, but I'd love to get your opinion on that. Will it be further delayed?
No, I mean, from a campaign, if I put my campaign hat on, we threw in the towel, I guess, on the 22nd of July when the legislation reached royal assent. So it is now the law. It is happening in April next year. And for it to be delayed in some way, well, there's not actually anything to delay. It's the law. Whereas the whole of the campaign was about stopping it becoming law. So it's now primary legislation, and it would be unheard of for primary legislation to be repealed. It's very difficult to then get things changed and delayed again once it becomes legislation. It's not something that they like to do. They don't like to be seen to be saying one thing and then doing another, particularly when something's become law and everyone's preparing. On top of that, for it to change, there would need to be new legislation in a finance act before next April that says change the date to another date. Now, for that to happen, someone would have to table it as a resolution at the next finance act. Can't see that happening. So the only chance then would be for someone, an MP, to table an amendment. Perhaps David Davis will try again. But then you can't table amendments at the moment, the way the Tories run their finance bills. You can't table amendments to something that's based on changing things that are in the current act. You can only make amendments to things that have been tabled as resolutions. So, I mean, we're really getting into the sort of theoretical, can Tottenham still win the league, or or is it has England still got a chance of getting through the group stage type conversations? It's not happening. I mean, I've spoken to some of the MPs who we were in contact with. There isn't enough support. We'd need more than 40. It's just not there. There's not really a way of it happening, I'm afraid. I'd love to say that there is, but there just isn't.
Yeah, and I would wholeheartedly agree. For sure, prior to the delay in March, there was a real belief that some of the changes that you had been pushing for, the House of Lords review that was published with the recommendations there was a genuine sort of belief that groundswell about amending IR35 to perhaps look at that sort of one-off tax per engagement or assignment would be a much more logical way to move forward. However, and with HMRC and the Treasury coming back pretty much within 24 hours of the House of Lords report and saying, thanks, but you know, we're set in stone, we're going forward. That for us was really the sort of, if I can put it this way, the final nail in the coffin. We for sure cannot see any changes happening here. And for us, with all of the COVID delays, all of the private sector suddenly shifted away from IR35 into this focus on COVID-19 and trying to ensure that the entire workforce, whether that was a contractor, whether it was a PAYE temp, an agency temp, or a full-time employee, or even someone, you know, through a Sodexo that might be coming in to clean the offices, were okay for the long term in some sort of capacity. And with the job retention scheme coming to a close, the shift is now definitely moving back towards IR35, and we are starting to see it pick up again in the marketplace, and people starting to pick this up. But I think for sure it will not be delayed any further. This will come into effect in April next year.
Oh, absolutely. The message is everybody needs to prepare. And last year, we started to see some people very early on, around almost a year before, start to make some preparations and inquiries, particularly the large financial institutions. And it was around September they got to the point where they decided, this is just too difficult for us. We can't do this. There's just too much to sort out. And I used to describe this to people as having a bit like a nightclub full of people, but you had to find the few people that were maybe sneaked in a pack of chewing gum or something. I don't know, whatever it is, it gets banned in them these days. I've not been for years, but it's a case of, right, everybody out, let's start again. What did you see as the reasons for, let's call it blanket bans, because a blanket assessment means someone's made an assessment, but or we could say PAYE only policy is possibly a bit more of a friendly way to put it.
Yeah, and for sure the finance industry operated pretty much to a T along what I mentioned earlier, is this policy, hiring policy change, or PAYE, temp PAYE only. So some of them were allowing umbrellas as well, but typically from a very restricted list of umbrellas. And I think that's a whole subject that we can perhaps cover off in this call on a slightly separate vein, but I'm sure we'll touch on umbrellas as we go through this. The finance sector really came out, and they did come out first in the private sector saying, look, we are just going to do PAYE engagements only. And I think there's a number of reasons for it. I genuinely don't believe it's for want of a better term, a lack of desire to do the determinations. It's not sort of a lazy approach as such, because some of the financial institutions had thousands of contractors on their books. So it was a big effort to do it. However, I believe it's more from having spent time working with a few organizations in the finance industry. It was more a case of the realization that they controlled the contractors for the main part, and there was a large degree of part and parcel within that as well. So those two key factors of IR35, forget the substitution, forget the mutuality of obligation for a second. It was all about control. And their sort of realization was, well, hang on a second, they all sit behind our firewall, they're all on our equipment, they all do 9 to 5, Monday to Friday in our offices. We are controlling them, and our policies, they're so risk averse in the finance sector when it comes to IT structures, firewalls, you know, allowing someone to bring in their own equipment into the offices, that they concluded, hey, we control these contractors, therefore we will head down the temp PAYE / umbrella route.
So I guess it was a case of, whilst there may well have been some contractors in there that were there on a, let's say, a project basis, and
Sure.
the classic outside IR35 ones, most of them were there with job titles, guaranteed hours per week, minimum hours, heavily controlled. And we've seen it. I mean, I worked in banking for years, and there was contractors, and there are contractors, we call them the dusties, or perm contractors. They've been there for years. They manage teams. So some of them weren't really your classic sort of go in, do a project, leave type contractor.
Correct.
So,
and that may be an 80-20 rule in the finance industry, but it's my honest opinion that the finance industry, and that's a broad brush to throw everyone in here, because there will be one or two going down that determination route, but the sort of the general approach in the finance industry, and I believe it was that 80-20 rule, which is, look, if 80% of them are operating and we're controlling them, we're just going to go down this route. HMRC get their money, and let's face it, the banks have had a really tough time in the past 10 years since the financial crash. Even recently, with the Panorama FinCEN story breaking, which I actually think is a completely separate topic, but it's slightly old news. Banks continue to face this challenge. They do not want to be in the British media for not being tax compliant. They don't want to have that further bashing. Everyone is very, very worried about brand reputation. So this enables them to be compliant with HMRC, to be seen to be contributing to the tax efforts within the UK. And when we've just announced a 2 trillion debt pile, HMRC want their money, and they're going to get it somehow.
Yeah, absolutely. With the banks and other firms, and I don't think it's fair to necessarily scapegoat banks. There were other firms that had similar problems. I mean, and we did speak to a few of the banks, and we went through lots of the case law, and some of them did sort of try to start by having a go doing assessments, and then realized it was just going to be too difficult for them, and most of them are inside, so they went for a blanket policy. But what was the effect on some of those firms, particularly for contractors deciding, well, okay, then if you're going to put me on payroll and say I'm inside, I'm leaving? Did we see lots of that? Did it have an effect on them at all?
In my experience, no. For the main part, no. There was always a small percentage that would come back and say, hang on a second. First and foremost, I have the right to self-determine up until April. And that obviously, with the delays, continues to be the case. Contractors can self-determine. We had a small percentage, and I'm talking maybe 5% up to 10% of that contractor population would come back and say, hang on a second, I am a genuine outside contractor, and it's their right to appeal it. That's completely fine. You have that legal right to appeal it, and that decision. And banks would, or any organization actually, in that scenario, even if you were going down the determination route, which we typically saw outside of the financial sector, would then accommodate that request and investigate it and come to a conclusion. So I genuinely believe there was a lack of communication. One of the real lessons learned from the preparation, looking back after the past 18 months, was communication could always be better. I don't think that's necessarily related to IR35, but I think in general, communication can always be better. You look at the recent HMRC, I think it was Ipsy Mori poll where they interviewed some 30 contractors. I think that communication could be so much better. Communication can always be so much better. But I think, the website offpayroll.org, that did a great job of sort of listing that, but I also felt there was miscommunication in there. So contractors have the right to appeal. Banks and any other end client organizations we work would look at that and consider that on a case-by-case basis, in my experience. But it wasn't that kind of 5 to 10% population, because I felt the majority of the contractors, when they were told, sorry, you're inside, would actually, for the main part, understand the reasons behind it. And then the initial question is, what's my new rate going forward? And how does that affect me? So a lot of end clients, irrespective of the industry, would actually say, look, you have the right to work up until April the 6th as a contractor. We would implement a new hiring policy or a blanket change, if you will, from X date. And that X date may be the 1st of Feb, it could have been the 1st of March, it could have been the 1st of Jan, whatever it was going to be. But the contractors, essentially, you can operate, say, to the end of March. And I'm making, again, a generalization around dates, but work to the end of March because it's your legal right to work as you see fit until that point, but have a clear cutoff from a payroll perspective. And a lot of people, another massive complication with IR35 was that the law changed in February last year. So not only did we have to, and if clients were using the CES tool, which wasn't exclusively, IR35 Shield, to appreciate we're talking, but generally has one of the best products in the marketplace that I ever saw and came across. I loved your graphical representations. I love the way you highlight risk in the various areas and relate it back to mutuality of obligation or control, and you can see that, and it's very easy to understand it. And I appreciate that I'm waffling on a bit, but the contractors typically will write, okay, I accept it because I understand I'm being controlled, and to use your phrase, I'm a bit dusty. However, it was then a case of, what are my rights moving forward? What am I likely to be paid? So then the conversation moved into, well, as a temp PAYE, as an agency PAYE, agency worker regulations kick in, and that affords you a whole different rights as an agency worker. So that is, you must be treated equally as a permanent employee. It's the right to equal pay as a permanent employee, albeit contractors are probably, because of the risks associated, on a higher rate to start with. But also things like statutory sick pay will kick in, statutory paternity pay, statutory maternity pay, and paid holidays. And that for sure eased or alleviated some of the concerns contractors had about moving to an agency PAYE.
So I guess, for those contractors that were told outside, carry on as normal, happy days, just carried on. But then those that were told, well, either you're inside or we're just going with a PAYE policy, no more outsides effectively. There were a number of options for them.
Yep.
One of them was, we're going to offer you a job. So some of that going on. And there may well have been some temp to perm fees happening between the agencies and companies.
Correct.
Heard of some of that. Then there was we can offer you a fixed term contract, which is, in my view, is sort of probably what they should be doing anyway. And then the other one is, you can go on the agency's payroll.
Yeah.
Again, that brings in the AWR, which we can talk about. And the other one was, the agencies didn't want to run their own payroll. So some of the agencies just don't run payroll. So then they would use an umbrella company to put it through there.
Yeah.
I guess those were the various options. The one I've left off is actually continuing to pay the PSC using the deemed direct payment calculation. No one was interested, were they?
No. So let me try and go through them one by one.
Permies. Let's start with Permies. What happened with Permies?
I also think there's another one to throw in, which is statement of work, but we'll get to that at the very end. So let me try and go through this then. So permanent, yes, we did see, I would say, again, somewhere in the region of about 5 to 10% of contractors being offered permanent positions. And typically there would be a reduction in salary, but what made the permanent offer attractive would be the company benefits. So some organizations, especially in sort of legal professions, insurance, and in the financial sector, offer great permanent benefits, such as pension contributions. Some companies might do 30, 35 days holiday, which of course is paid. And so there was a real incentive to move. So yes, a reduction in take-home pay from a contractor to a permanent salary, but the benefits would then make up for it. And in actual fact, in hindsight, with COVID kicking in, anyone who took that permanent offer was in a position of greatest economic security from having a permanent contract.
Provided they got paid, I think, before February, wasn't it? There were some dates around that.
Correct. So if you made a decision early, if you were offered it and you moved early, you were a benefactor of an awful pandemic in that regard. I was aware of one or two organisations in the private sector just going down the permanent route and saying to all their contractor base, "We're going permanent. We're just going to take you on permanently." But that would be organisations with a very small contractor population, because if you have a significant number of contractors and you increase your headcount, then you would have to report that to the marketplace. There were certain protocols that you have to follow. So we didn't see it on a mass event, but I would say about 5 to 10% of the contractor population would be offered permanent.
So then what happened with the fixed term contracts? Did we start to see lots of those as well?
We didn't, funny enough, because the fixed term contract, again, in my experience of the 20 years in the staffing industry, is fixed term contracts tend to typically be used in a very limited fashion. And to your point, it's probably an area that needs greater exploration and better understanding, because the fixed term contract, you essentially become an employee of that end client, of that organization, but it is for a fixed term period. Hence, it says what it does on the tin. So we typically saw those being used for maternity covers, where, hey, we need an HR specialist to come in on a 9-month contract. We'll make you a fixed term contractor. And we did see small pockets of that happening, but not in any great shape or form. But it is a really valid way to move forward, because you can still, some contractors became contractors for a lifestyle choice, and in those scenarios, fixed term contracts for sure is a way forward. But we didn't see it on a mass scale happening. What we really saw was that temp PAYE, the agency PAYE, and/or umbrella.
So we did. So not so many fixed term contracts. I'm surprised at that, because they're quite good. I quite like fixed term contracts because you don't know. You might have some uncertainty about what's happening. So you'd like to offer someone a job, but you're not quite sure where you're going to be in a year or 18 months time. So fixed term seems to make sense. So the agency payroll ones or umbrella, essentially, they're going to be paid PAYE.
Yes.
Now, why did some agencies just choose, well, you're just going on our payroll, and why did others just decide to say, no, you're going through an umbrella? Or why was their choice? Because they seem to be the same thing. Just run agency payroll seems to be the easiest thing to do.
Yeah, and I think it's a really valid question, and I wish there was a magic answer for it. But ultimately, the agencies, whilst trying to guide and advise and be a true partner to their end clients in the private sector, are following the end client's desire. So the end client may have said, we are only doing temp PAYE, which means you have to become agency payroll. Now, the recruitment industry in the UK is one of the easiest to get into. So I think the last count, I hate to think actually, but there are thousands of recruitment agencies, staffing businesses, talent acquisition companies, whatever language you want to use. And like construction, it's very easy to get into, and the industry is actually governed by the conduct regs of 2003, which I'm sure we can also get into as part of this. However, though, the agencies may be solely dealing in contractors. They may not actually operate with temp PAYE staff today. So they wouldn't have the need or necessarily the capability to run agency payroll. And what we mean by agency payroll is a true PAYE payroll where you're deducting the necessary HMRC deductions, NICs, you name it, social insurance from that, and you get a pay slip essentially as you were a permanent employee, although you're a temp. So some agencies just don't have the scope, breadth, or need to run agency payroll. So moving forward, they either have to come up with a solution to do it, or they have to outsource that function to comply. The alternative that clients were introducing, and I know for sure we were talking to end clients about, were the umbrella organizations. So umbrella organizations historically have a slightly tough reputation to uphold. And that's because of some of the activities in the past, such as loan schemes that HMRC have highlighted in the past 2 years as well. But there are really, really reputable umbrella organizations out there. Interesting, and I think it's actually sort of gone under the radar a little bit, but the Good Work Plan, which came out of the Taylor report, came into effect in April, and the Good Work Plan actually stipulates that people need a key information document now, and that key information document outlines who's paying you, how often you get paid, and what are the statutory deductions that are coming from that. And the umbrellas will operate by paying you as a contractor a minimum wage. So that's probably the national living wage if you're over 25, and if you're under 25, probably the minimum wage. And the rest of the money that is owed to you is paid in bonuses. So it is a tax efficient way for contractors to operate, but it is a compliant model.
Yes, I mean, the compliant umbrellas, I've always said there's about the umbrella companies. If it looks complex or exciting, it might not be right. If it looks extremely dull and boring, it's probably compliant, because I don't find that anything exciting about a salary tax calculation. And they can provide these very small niche agencies, which are very valuable to the economy, with a solution to process all of the payroll.
Correct.
And so on. I mean, if you're running your own payroll, I mean, we have a payroll. We just get all the pay slips sent to us every month, but we still have to go through all the hassle of doing it. So I can see how some agencies might want to outsource the entire thing and put an umbrella in the chain. One of the issues that we saw last year was the whole renegotiation of the rates and confusion around who has to pay what. So it's useful that these key information documents have come in, and to clarify, these are a legal requirement for agencies to produce for all of their workers from April 2020. So they're already there. You should ask for your key information document, or I think they actually have to give it, don't they? You don't. You don't have to ask. They have to give it to you.
Yeah, there's a legal requirement to hand it out, and that's whether you're a contractor that's actually outside of IR35. It's basically, if you are, it was originally designed to combat the gig economy. So if you're an Uber driver or a Deliveroo cyclist, you're actually getting a really clear breakdown of what your pay structure is going to be. But it's been applied across the temporary engagement field, if you will. So that is a temp PAY engagement, a true outside of IR35 contract engagement, or an umbrella engagement. You need this key information document. AWR, Agency Worker Regulations, which came into effect in 2011, under AWR, as a temporary worker, you should, before day one of your engagement, actually get what is known as an assignment schedule. So where you're going to work, the hours you're going to work, who you're going to report to, some really sort of basic key information. The key information document enhances that by saying, this is what you're going to get paid, this is who's going to pay you, and these are the deductions that are going to come off it. So you should be getting, in the temp world, temp agency, you should be getting an assignment schedule and a KID, and then irrespective, you should always get this KID. And that was introduced in April this year, but I think it's gone under the radar a little bit with COVID and everything else.
It has a bit, and I mean, you can't blame the companies for not having implemented it yet, really, with all of the problems with COVID. But this should hopefully sort out all the problems with rates, where contractors were being quoted a rate that includes all the employment taxes on top of their rate, which they're not actually getting paid. And then they find out on their first pay slip, oh, hang on a sec, I've had almost half my money deducted from me that I told I was going to get paid. And that was always a bugbear for me. And I used to refer to these types of rates as Smurf rates, because there's no such thing as an assignment rate in law. It's either PAYE, which is employment income, or it's gross. I mean, it really is that simple. So, but now we have the key information document. So it tells you, and if the contractor reads that and still signs up and then complains later, well, I'm sorry, you should have read it, frankly, and found out what you're really getting paid. So it should help with all of the transparency. And then everyone needs to be big boys and look after themselves and read what they're given, really.
Yeah, and I think this highlights something that agencies, umbrella companies, and even organizations in the private sector really need to ramp up support for. So come your April payroll run next year, make sure you've got a mechanism in place to support the volume of queries that are going to come in, because you're going to have thousands and thousands of contractors across, and admittedly, like I said at the start, my sphere was high-end, high daily rated, white-collar professional contractors. But you will have people who have contracted from, the days they've left school or the day they've left university, and won't know how to read a PAYE payslip. It seems, again, a sort of a fairly out there statement, but you need to be able to make sure that you're supporting that contractor base in this transition. So ramp up your support services and ramp up that communication around this area.
So now these contractors may well be inside IR35.
Mm-hmm.
They are either going on agency payroll or umbrella. So things are now different for the agencies and the clients, because all of these regulations come into play. So we've got the conduct of employment regulations, which historically, if you were a contractor with your own limited company, you would opt out of those. So those didn't apply. So we refer to those as the conduct regs. And then we've got AWR, which we'll come on to. So the conduct regs, my understanding is, they will now apply for all these contractors that are either put on agency payroll or through an umbrella, because there's the supervision, direction and control applies and so on. So what are the conduct regs and these extra rights that contractors should expect to get?
So the conduct regs introduced in 2003 is essentially legislation that governs employment agencies and employment businesses. So you're right to say that contractors typically opted out, because if you are governed by the conduct regs, you are essentially saying that you are controlled either by that agency or by that end client that you're working for. So the conduct regs are really there to try and ensure agencies and employment businesses are doing the right thing and working along the right lines. So there's a couple of key points in there, and I'll probably get my numbers the wrong way round, but I think it's Article 10 says that you must be paid as a worker under the conduct regs, even if there's a dispute. So if you typically you'll have to fill in a timesheet that might be weekly, it might be monthly, and you say, hey, I've done 40 hours or I've worked 5 days, and on your assignment schedule it says that you're going to be paid £100 a day, so it's 500 quid for the week. I keep my maths simple. If the client disputes it, hasn't signed the timesheet off, under the conduct regs, you have to be paid. That is your legal right, so you must be paid that money. There's another one in there, and this might be 14 or 12, again, I can't remember off the top of my head, but it's all about the right to hire the worker. So typically contracts would say, hey, look, you must have a non-compete for 6 months. So if you've worked at this client, you can't go back there in a permanent capacity after 6 months. The conduct regs basically say, look, that can't happen. You have the right to work, and you have that right to get out there and work. And I think it's now says it's 14 weeks after you finish, or another date that comes in first after the 2. I'd have to do a bit of homework and check it out, but it stops you from sort of saying, hey, you can't work for that person for 12 months. And the conduct regs are there to basically protect the workers and ensure agencies are doing the right thing. Those
two regulations, they seem a bit unfair on the agency. So the agency could do all of this work and they're not getting paid for it, find the person to provide the services and work for the client, and then they could be there a couple of weeks, and then there's no restrictive covenants are allowed to apply, and they just go direct. Well, that doesn't seem very fair on the agency. How would the agency overcome that?
So the agencies will operate with what we call temp to perm fees. So they typically cover a 12-month period. They're typically on a descending scale that says, hey, in the first 6 months, we will charge you X% of assignment value, or a one-off fee of X pounds. And then after a certain period, so say that's 100% of assignment fee for the first 3 months, and then I don't know, 3 to 9 months is going to be 50%, and 9 to 12 months will be 25%. And those are built into the commercial arrangements between the agency and the end client. So there are ways for agencies to sort of, it's not go outside of the conduct regs, but be commercially protected within that scenario. And we saw some of that with the run up to IR35, where clients are saying, well, we'll just take all these people on permanently. Well, great, it's great that you do that, but there is a fee for that to happen that's built into the commercials.
Yeah, that seems totally fair, because the agency has to protect its commercial interests. What about if the contractor or the client's unhappy with the agency? Could the contractor just start contracting direct with the client on their own basis and cut the agency out? Because that wouldn't be fair again, would it?
Well, so that in many ways talks to the deemed model, which was the one we didn't necessarily cover off just a couple of minutes ago. But the deemed model essentially allows for a PSC, a personal service company, to work inside of IR35, but direct for the client, essentially. Yeah. And every client I worked with in the private sector, even last week, I was working with an agency, and the deemed model came up, and everyone has shied away from it. And it's because it's such a complicated model to operate. So AWR kicks in. So this treatment of equal treatment compared to a permanent employee kicks in. You have to pay PAYE taxes, but you've got no visibility into that. So how do you guarantee the PSC is actually operating a PAYE payroll? How does the PSC then operate a PAYE payroll? So every end client has just shied away from this deemed model because it's just too complicated to operate, which is why you see them saying, hey, look, it's agency, temp, PAYE, or umbrella.
Yeah, so the contractor could just bypass the agency. That's not fair on the agency, is it? Because the conduct regs say you can't just do that. So I guess the agency and the client just have to have a good relationship and make sure that just doesn't happen, really.
So a lot of end clients will also operate what we refer to as a PSL, a preferred supplier list. And if they have an MSP in place, a managed service provider, they will be the gatekeeper into that PSL, essentially. So the MSP may be an agency, it may be a neutral vendor that is purely there to manage the suppliers on behalf of the client. But you would then have to go through all sorts of credit checks, credit history. And this is why we also mentioned statement of work earlier. We had a lot of questions about statement of work from contractor populations and one or two end clients in the run up to April 2020. And to operate as a statement of work, first and foremost, IR35 still applies in the statement of work, but it shifts the liability from the end client down to the provider of the statement of work.
Yeah.
But to then operate as a statement of work, as a contractor, you need a whole sort of different operating structure. You will need different insurances. And from the end client perspective, much the same with these preferred supplier lists, you will have to go through credit checks. You'll have to go through the procurement department. They will want references, and suddenly all these barriers start to build up, which is another reason why the deemed model it's why clients want to shy away from it, because suddenly, rather than the PSC coming through the agency as it would today, PSC goes direct, and suddenly you're going to have to go through a whole different procurement channel to get that PSC approved within the approved supplier listing for a client.
I mean, for a large client, I've said this for years, is where contractors say, oh, well, I can just go direct and cut out the agency. And they ask, does the restrictive covenant hold and everything? And I say to them, well, good luck even trying that, because they don't want to hire you directly. They want everyone to go through agencies. They want to have that arm's length relationship. And as you say, they'd have to go through procurement, and the whole thing's an absolute nightmare. So clients are very comfortable using agencies. It's the way they want to use them because of that arm's length relationship. So whilst the conduct regs say, I guess, you could bypass. In reality, that's just not going to happen. But then the other one you touched on was, well, you still get paid whether the clients pay the agency or not.
Correct.
Now, there's probably lots of contractors that would quite like to have that right. And I guess there's lots of agencies that wouldn't want contractors to have that right. So how do they resolve that one? Because this is now a thing, right, where you have to pay them. I mean, you can invoice factoring, I guess, is one option. Are there, what else do the agencies do?
Well, this is, I suppose from the worker perspective, this is one of the great things about the conduct regs, because you are going to get paid if you work. And I actually don't have a problem with it. I completely agree with it, because if I work, I want to get paid. And the conduct regs ensure that that happens. It then becomes the responsibility of the agency to factor in payment terms. So typically, if you're what we see is that agencies will either run a weekly payroll or a monthly payroll, or both. I've come across one or two running a fortnightly payroll, but it doesn't happen too often. And it's up to the agency to then make sure that they either have sufficient funds or sufficient credit with banks to ensure that they can operate this. But with so many agencies out there in the marketplace, it is a common process, and the banks are supportive of agencies that are running payroll to ensure that the real challenge for agencies is actually the payment terms from clients, because some clients will operate 90-day payment terms, which is a really tough situation for the agencies. Now, this is completely outside of IR35. Again, that's the commercial agreements that you either sign up to or you negotiate with your end client as an agency.
So if you are now in the conduct regs apply, you should get paid regardless, and it's the agency's fault. And I guess in a way it's just a bit tough, and they have to factor out the invoices, borrow the money from the bank, or whatever it is they've got to do. Can they put clauses in their contract though that just say, we're only going to pay you, forget the conduct regs, we're only going to pay you when we've been paid? Can they override the conduct regs? I don't think you can.
No, I don't believe you can. And if anyone saw that in a contract, I would immediately flag it and say, hang on a second, it's just not right. This isn't fair or right. I think, I don't believe you would be able to do that. But to come back to the original question, hey, if you want to operate in the staffing industry, that you operate within the conduct regs, so you should come in as an agency eyes wide open to that regulation.
So the other regulations that come into play are the agency workers regulations, AWR. They've been around, I think you said, since 2011 again, for contractors operating outside IR35. We don't have to worry about AWR, but now this is compliance regulations that come into play. So what do agencies, contractors and clients now need to be thinking about hiring people on agency payroll or umbrella because of AWR?
Yeah, so Agency Worker Directive was an EU directive introduced into legislation in 2010 and came into effect in 2011 in the UK. Agency worker regulations are there to protect the temporary PAYE workers, and it will apply to umbrella organizations as well. So if you're coming in through umbrella, AWR still applies. And AWR is there to give you equal treatment as a temporary worker to a permanent worker. I think it's very important to point out it doesn't necessarily mean equal benefit, but equal treatment. Clients have, or end organizations have, the choice to introduce agency worker regulations from day one or after 12 weeks. So typically they kick in after 12 weeks. But what you will see is that AWR means that, first and foremost, you must be on equal pay to a permanent employee. Now, contractors typically will be probably over a permanent equivalent, so there should be parity in that regard. Doesn't mean that they can suddenly reduce your rate. Your rate is your rate. But it should give you other advantages, such as paid holiday. So if the end client says, hey, we have 25 days paid holiday, you will be entitled to that benefit. So in today's world, a contractor doesn't get healthcare, they don't get paid holidays as part of their contract because they've opted out of conduct regs and they are not a temporary worker. That's why they are a contractor. So paid holidays will for sure help in terms of that financial hit that contractors get. Some of the other things that kick in with AWR are things such as statutory sick pay, which isn't massive. It's about 92 quid a week, but it's something. You still have pension contributions, which again, you can opt out of if you so desire. But you should also be able to have other benefits. So if there is a cafeteria on site, you should be able to access that cafeteria and have the same access as a permanent employee. They may do gym membership or something like that you can take advantage of. And one of the other key benefits of AWR is that if there is a role advertised internally at the end client, whether that be a permanent position or a temporary position, you should be able to apply for that as a permanent employee would from day one as soon as it's advertised.
Okay, so I guess for your typical contractor, of those, no doubt everyone would enjoy the subsidised canteen. I remember there being one at Freshfields when I worked there. It was fantastic. But I would say possibly the main one would be they're expecting to get paid holiday.
Yeah.
And the same number of days as their permanent counterparts after 12 weeks.
Yeah.
So this is something contractors need to consider then when they're being offered a different rate. They need to do their calculation that takes into account if it's £400 a day, they're getting that every day for all 52 weeks of the year, including bank holidays, compared to if they were outside. So they need to factor all of that in.
Correct.
That's quite a difference, actually. That could make quite a change.
Make a difference. So it works on the accrual basis. So you wouldn't say from day one be entitled to go off on 25 days and get paid for that.
No.
You may have the right to say, hey, look, I'm going to be on holiday for 2 weeks, and if you've accrued enough holiday for say 2 days by the time you go, you will get paid for 2 days, but the rest of it would be unpaid, and that's the same as if you're a permanent employee essentially. But if you say, hey, you get 25 days, 30 days holiday, by the end of the year, under the agency contract and under AWR, you are actively encouraged to take those holidays. So a lot of it is, lose it if you don't use it. So that's another thing to bear in mind. So I know in the contractor world, because you don't get paid if you don't work, people will work 260 days a year and say, well, hey, it's my choice not to take the holidays. And you are completely free to do that. Under AWR, you are encouraged to take your holidays because you are treated like a permanent employee. So it's not a case of just saying, well, I've worked a full year. I've stacked up these 30 days holidays, all my money, you got to pay it to me. You are actively encouraged to take these holidays. So if you have kids and you're thinking, hey, I can now go on half term or I can go on a summer holiday, you are likely to have accrued that holiday and you will be paid for that period. So you're not losing out in that sense.
No, I mean, I guess all of the normal rules for holiday pay apply. And it's important to stress that it is a use it or lose it regime. I say that to my employees. And I think as well with holidays, if someone's off sick, they can elect, you can't encourage, but they can elect to say, well, actually, I'd like to use one of my holiday days, please, and then get paid full for that particular day.
Yep, that is an option available to you. But under AWR, you would also be entitled to statutory sick pay. So you follow the end client's policy, and the policy might be that, hey, you can be sick for a day without a doctor's note, or 2 days, and then after a third day, you must produce a doctor's note. And then statutory sick pay may kick in, and it may be they do above and beyond statutory sick pay, or they may just say, look, we just do that. But that's another thing that would potentially kick in. And like I said, I think I remember it was like £92.50 a week. So
it's not much. It's not much. Staying on just on the holiday, and then I'll come back to the sick pay again. Just to clarify for people watching this, my understanding is that they can choose. They can choose not to take all of their holiday, and then it doesn't roll over. I mean, you're not allowed to have an automatic rollover. That's illegal. I think if you encourage them not to use their holidays, then it is allowed to be rolled over, or it has to be. There's a subtle way around that, but you can't just stack it all up and then pay it out you're not allowed to even actually pay it out as well, are you? Because the whole idea of holiday is that it should be taken. That's the whole sort of underlying premise, I understand.
Yeah, I think any contractor who's sort of scratching their head and going, well, how does holiday pay work? The starting premise is use it or lose it. So if you haven't used it, you will lose it. And that is the sort of golden rule to operate by. So are you allowed to carry days over? If the end client policy is that you can carry days over, then you will be entitled to do that. So typically, in my experience, you can normally carry 5 days over, but they must be used by the end of Q1 in the following year. So if you have accrued 25 days, you use 20 by the end of the year, then you can take 5 and they will still be honoured between January and March the following year. But the golden rule is use it or lose it. If anyone is out there saying to a contractor who's new to the temp agency world, or an existing temp saying, oh, don't worry about taking your holidays, you know, just build up the pot, I'd be seriously alarmed by that, because that's really poor advice.
That's not good. Yeah, no, that's not good. Going back to the sick pay then, and this, I jokingly say that it doesn't really apply to contractors that are outside IR35 because they're never off sick. But if a contractor's off sick, so statutory sick pay, from memory, it's the first 2 days you don't get paid, and then it's £92 or so on, unless that's the minimum, unless the company has a policy. Correct. So if the company has a policy, are we going into AWR world where, let's say the company has a policy that they pay full pay, you know, for example, like the civil service, they pay full sick pay, don't they, for a very long time, whilst the person's off sick from day one? Would that still have to, would that be the same treatment for contractors, or is that a benefit?
So I think I have to be really clear. Contractors opt out of conduct regs and by definition opt out of AWR so that they can operate as contractors. And maybe we shouldn't use the analogy of people being sick during COVID, but you know, if you don't work as a contractor, you're not going to get paid. Under AWR, you are entitled to the same treatment as a permanent employee. So if the end client, and you've gone through that 12-week qualifying period, if the end client then says, or has a policy around statutory sick pay, which is we'll pay full pay for however long you're sick, as a temporary PAYE worker, you will be entitled to that same benefit.
That's quite a good benefit.
But, I should say.
Well, it's nice. It's nice. I guess that would be a nice comfort to have. I think the average number of sick days in the UK is about 4 point something per employee, so around that number. But that's quite a good benefit for contractors, I would say. So if these firms that are now taking contractors on an inside basis, payroll, agency payroll or umbrella, however it's done, you've got conduct regs, AWR. Let's go back to the deemed model, because whilst the calculation is a nightmare, it doesn't have to be. And obviously there was last year all of these conversations with the big end hirers saying, we can't do this because we've got VAT in one system and we've got PAYE in another system. It will cost us hundreds of thousands of pounds to fix this up. We just can't do it. That was one of the reasons I understand they didn't. But they could hire through an agency, and the agency pays that money to another company who runs the deemed payment model, and then pays the PSC, and then pays the worker. Let's say that's the way it's going to work, because that's actually one of the diagrams in HMRC's current slide pack. Does that mean no conduct regs and no AWR, or are the conduct regs and AWR still in play?
So, and this is
this ask the audience one, is it?
It's such a great question, because this is what a lot of agencies and organizations in the private sector are trying to grapple with, because you still pay the PSC. So you're going to pay them gross.
No, net of tax you pay them, don't you?
Sorry, net. But AWR applies. So how do you apply AWR to an organization? Because the PSC is an organization. It's not a person, it's an entity.
Yeah.
And then how do you guarantee as the end client? Because don't forget, in the Deem model, you have the potential scenario for the end client to be the ultimate fee payer, because the PSE is potentially invoicing the end client directly.
No agency, are we saying?
So in the no agency scenario.
Okay.
So if the PSE is then not applying PAYE taxes properly, end client is liable under HMRC's IR35. Who's the fee payer? You're ultimately liable.
Yeah. Yeah.
In the agency scenario, the agency is the fee payer. End client makes the determinations, but the agency is the fee payer.
Yeah.
They're running the payroll.
Yeah.
And therefore they're liable for any errors. And in the Deem model, it just gets so complicated and so confusing. Yes, it is a legally viable, above board way to operate, but no one is moving down that channel or offering it because it's just so confusing.
So are we saying that under the deemed model, because I have seen that there are some companies sort of offering, like payment intermediaries offering deemed payments and so on to process it. I have no idea how successful or not they are.
Yeah.
But does it mean that that it does then cut out conduct regs and AWR, or do those all still apply anyway?
I think it potentially cuts out the conduct regs, because you're not an employment agency, you are a personal services company.
Yeah.
But it does not cut out AWR because you're operating inside of IR35. Therefore, you are operating as a temporary PAY engagement. It's just that you're not going through an agency. You know, in the scenario, you're not running through an agency PAYE payroll, and you're not coming through an umbrella organization that would be deducting the taxes. So for sure, AWR applies, and you have to operate in a PAYE world.
There's absolutely no point, is there really? It's just too complicated for everybody. It's agency payroll or payment intermediary, an umbrella of some sort is the only sort of sensible way of doing it.
Yeah, and every organization is looking for efficiencies. They just want simple processes, simple efficiencies. Yeah. And they may have outsourced their, as we mentioned earlier, the preferred suppliers, they may have outsourced that to a managed service provider, who then control that supply list. And, you know, that supply list is going to be agencies or umbrellas.
So is this the way you see things shaping out again as we approach April 2021? Do you see anything different happening? I mean, we're all a bit delayed now, aren't we? Because we're waiting for furlough to finish. Yeah. How do you see the months panning out as we approach April?
So IR35 has definitely ramped up in the past 4 weeks. And again, I think everyone needs to focus on their communication and education efforts. And I think there's still a great deal of education that's needed for the private sector organizations, which is, hey, if you go down the determination route, and you take reasonable care in that process, and you can evidence that reasonable care, you've got nothing to worry about. So if you're finding contractors outside, and you highlighted a report this week, in the past couple of days from PwC about how COVID may actually positively impact the contractor world because no one's commuting. So therefore it's harder to say that you're under the control of an end client because you are genuinely working remotely, you're probably working your own hours. And I think this is why communication and education is so important. Communicate to your agencies and your contractors and your umbrellas about what you're doing. Make sure you've got your, for want of a better word, your cutover dates in place. So if you are going to implement a new hiring policy, you do that from a very distinctive point. Make sure you have a distinctive point to cut over contractors onto a temp PAYE/umbrella contract. And if you're going down that determination route, involve the contractors in it. You know, don't do it in isolation. Make sure they're part of that journey. And this is another great thing about the IR35 Shield process. Contractors are actively inputting into that process. If you're going down the determination route, first and foremost, CEST isn't your only option. I know it's free to use. I know it's quick to use, which is another benefit that end clients or private sector organisations look at. But it's horribly flawed. It is really, I think, being pulled pillar to post. And you will know more than anyone else, Dave, just how it hasn't stood up in any of the cases that have gone to court today.
Yeah, I mean, it's true to say that I have given CEST a bit of a hard time, but I'm not the only one. The underlying issue I have with it is that it sets the bar too high for somebody to be outside of IR35, and it does so, essentially it's biased, it does so by ignoring lots of areas of case law, and I would say the underlying weightings in the algorithm aren't right, but it basically sets the bar too high. So it's going to say most people are caught perhaps when they're not. Now that's not good for UK industry, for everybody to go on payroll. Particularly for those contractors that are mobile contractors and companies that need a mobile workforce, because all of those expenses now they can no longer claim because they're inside IR35. So it's not a good thing for the whole workforce to go on payroll. So that bothers me, and it bothers me that HMRC are effectively by the back door trying to get everyone to go onto payroll. And essentially override the case law. I just think as a principled thing, that's wrong. The other concern I have is that if it says you're outside IR35, it puts way too much emphasis on substitution. If you just answer that substitution is okay, whilst you answer all of the other questions, it just ignores those ones and still says you're outside. Now, that's not going to hold any weight in court. Forget it, game over. And then, so let's say you're okay on substitution. It then says on control, you have to have virtually no control over the contractor at all, which doesn't align with case law. But then if you do get through on control and you say there's virtually no control, HMRC can turn up and say, well, you've answered that wrong because there is some control and you should have answered it with the second option. So you have not put the data in correctly. It is not accurate. Give us your money. So the protection isn't there, and it sets the bar too high. So that's from I guess, a case law perspective, whilst I'm not happy with it. The other thing is, I mean, and you touched on it before, companies want to have easy processes and not a large admin burden. We spoke to one firm recently, and they had 3 people they had hired that were spending the whole time just doing CEST assessments. That's just completely impractical and expensive, and it will be inconsistent. So it doesn't help with all of the workflow side of things.
I think this was part of the challenge as well with CEST, is that, you know, we will welcome the changes to CEST that HMRC did back in February, but they also put a lot of noses out of joint in the fact that a lot of end clients and private sector organizations had done their determinations, if they were using CEST, had done their determinations prior to January 2020, so that they could use those 3 months to actually sit down with the contractor base and say, look, here's your determinations, here's how we found it, do you want to appeal it, these are your options. You know, it was genuinely collaborative effort. And then HMRC makes all these changes to CEST in February, and everyone's, oh God, we've got to go do this all again. So, hey, welcome changes, but you're shooting yourself in the foot at the same time. You know, keep it consistent, sign it off, lock it out, and get on with it. Yes,
I mean, we saw some operational challenges around changes last year. I mean, when we were working with firms, one in particular, it had over 500 contractors, and having profiled the workforce and found out where perhaps some of the challenges were from a status perspective, they decided to then implement new policies and actually treat some of their contractors differently. Some, you know, perhaps more towards an outside, some more towards inside. So based on how we do things in Shield, they were able to then make those changes to the areas where that for those particular sort of types of working conditions. And then we just ran all of the assessments again, and it took about 3 hours to run another 600 status determinations and get them right. Whereas if you're with CEST, you can't even do that. You're sitting there doing them all one at a time again.
Yeah.
And then the other type of thing that we can do for firms is, well, if there are changes to the case law, and maybe we think we need to adjust some of the weightings and how we're dealing in some of the areas, and mutuality of obligation will be one of them, then again, we can version the algorithm, run it again against all of the data that they've already provided, and tell them your new picture looks like this, and Doug, Steve, and Julie, you can tell I was born in the 70s, they're the ones that you need to be looking at because they're now inside. So we've got that kind of thing that we can do, whereas if you're with CEST, you don't have a database, and you're back to having to put them all in individually. So yeah, it's a challenge operationally, keeping on top of all of the status and managing the contractors and the project managers to make sure they're all sort of staying on track. I think that's one of the challenges for firms, particularly with large workforces.
Yeah, and I think to pick up on your point about doing regular assessments is absolutely key. So if you're going down that determination path, make sure that you are building in a process around regular determinations, 3 months, 6 months, on assignment extension, whatever it might be. Make sure you're doing that to continue to show that reasonable care from the end client perspective, but also to reassure the contractor that you are, treating them fairly and you're trying to do right by all parties.
Okay, so just to wrap up then, we've got, what are we now? We're almost into October. So we've got 6 months really probably for people to get ready. How do you think things are going to pan out over the next 6 months with firms getting ready?
I think first and foremost, accept that this is happening. Don't think there's any further delays coming. This is really happening. Secondly, for a lot of private sector organizations, it'd be a case of reactivating everything that was mothballed in March and making sure that you use these 6 months really proactively. Re-energize those processes that you had in place. If you need to reassess your contractor base, you may have let some people go. There may be some new faces in your organization. Don't just think that what you did in the run up to March when you got delayed is still valid. Make sure you review what you did, reactivate what you've done, update any processes that need to be updated, and make sure that you communicate throughout this entire process. Those 6 months will go extremely quickly. And this is for sure where Hide the Path can come in and assist. They can help understand the regulations, the processes, how to analyze your workforce, and to help in terms of which direction is the best path to take. But I would equally, Dave, throw that question back to you. How do you see the next 6 months coming out?
Well, optimistically, I'd like to see more clients starting their educational journey earlier. Everyone had a dress rehearsal last year, and there was mass panic, particularly around January and February in particular. So those firms would have, well, some of them were struggling. So provided they get ready and they start doing things now, and the educational bit now, I think they'll be okay. I think they need to be ready by Christmas and have pretty much got a plan in place, ready to maybe either implement in December or certainly implement in January, so that when it does come to April, the tumbleweeds are just blowing by really, and they've done what they needed to do. We're still going to get the ones that come late to the game, February, March. That's just the nature of the industry. But I don't see this being as much of a headache this time round as it was last time for firms, because there's just a lot more education that has been done. So again, it's a case of re-energizing and picking up where they left off. I think all of the status determination statements will probably need to be done again, particularly if they've got remote workers. Those factors will be coming into play in the control aspects of the status determinations. So they probably need to do all those again. I think it would be difficult to argue that you've adhered to reasonable care for someone where the tax risk applies from April next year and you did a determination over a year before. That's not going to hold weight. So everyone needs to basically just sort of start again and reuse as much as what they can, and probably get over the line and be ready sort of end of Jan, start of Feb, I would say.
Yeah, you definitely don't leave it to the last minute. Whatever.
Definitely don't leave it to the last minute. James, it's been great talking to you today. I'd recommend agencies and clients, if they need help with any of the compliance aspects, certainly to speak to your firm, Hiverpath, particularly around conduct regs and AWR, which many agencies will need to get to grips with properly as they go forward. And I wish you every success, actually, as we head on in, and as it's now getting very busy.
Well, Dave, thanks very much for your time as well. It was great to have the chance to catch up and talk through this really important topic, and it was great to see you again.